Do you want to organize your finances, create wealth, and transform your wealth into a legacy? It's time to start today.
Welcome to Octane. My name's Andrew Wall. I'm the managing partner of CPA for IT.
And I'm Rachel Stedman, head of customer care.
Our new podcast designed to give your small business the fuel it needs to succeed. Hello, everybody. It's Andrew Wall here again with my co-host, the lovely Rachel Stedman, here for episode number 3 of Octane, our new podcast dedicated to fueling the success of small business owners. Now, Rachel, you had a really interesting thing you wanted to talk about this week. What's our topic for today? And you are muted.
I'm so sorry. Do we have to do all of that all over again? Yes, we do. I'm sorry.
I say we leave it because that's the beauty of podcasts is the authenticity
technology
and the technology. And I think that's the most common buzzword of 2021 and now 2022. You are muted. The most common catchphrase. But we have a great topic for today. What's our topic?
Yeah, so our topic today is we're going to discuss what expenses can I claim. So I think that's one of the main things that small business owners want to know. What are my deductions? What can I and can't I deduct? What's an expense versus what's an asset? So there are so many questions around that. And of course, some are very specific to the industry. And, you know, a lot of people have fear of CRA, so they don't deduct expenses that they legitimately can. So that's what we're going to talk about today and give a little bit of clarity to a lot of business owners so that they know what they can use to be able to maximize on their deductions.
Absolutely. And I think the most important thing when we talk about expenses is that documentation piece, because at the end of the day, when it comes to, you can deduct whatever you want. It's whether CRA is going to accept your deduction is the most important thing, right?
Definitely.
So the key to that is documentation. So we're big fans of Receipt Bank, now Decked, formerly Receipt Bank, now Decked. Which is a mobile phone, an app for your mobile phone that allows you to take your mobile phone, which you have with you all the time, and simply snap a picture of your receipt. And now you have a permanent record for good.
I tell clients it's a bit of a digital shoebox, right? You just take a picture and you put it there, and the technology also helps to kind of, you know, fit things and categorize things. So it definitely does make things easier for a lot of businesses.
Absolutely. And if you're a client of ours, we give you that app completely free of charge. If you're not a client of ours, unfortunately, you got to pay about $20 a month to get it, but it's worth every penny.
It really is.
It really is. Because what a lot of people, what we know, Rachel, certainly, but some people may not be aware, is that receipts are printed on a special type of paper that is heat sensitive.
The thermal receipts, yep.
The thermal receipts. And if you put those on your dashboard or next to a heater, and you look at them 2 years later, they're not going to be legible.
That is a problem.
And your bank statement and credit card statement, that's not valid source documentation from CRA's perspective. It doesn't have the GST HST number on it. We've got a whole other section on GST HST.
Yep.
It also doesn't have the line item details. So if you went to the Bay, what did you buy at the Bay?
You could buy a lot of different things. Yep.
Right? It could be a computer. It could be a bed. It could be, a meal. It could be just about anything. So,
that's true.
That line item detail is really important from CRA's perspective. So the key to being able to deduct the expense first and foremost is that level of documentation.
Indeed.
Next, there's some criteria, right, around what is deductible. And there's 3 major criteria that every small business owner should be aware of. And the first and definitively the most important is it can't be specifically disallowed by the Income Tax Act.
That is true.
Now, the good news is, even though the Income Tax Act is like this really big document, there's not actually a lot of things that are specifically disallowed by the Income Tax Act. When it comes to expenses, it's more about tax law and interpretation of the Income Tax Act that defines whether we can or can't deduct expenses. But there's a couple of notable things that you can't deduct. Club memberships are specifically disallowed. So, your gyms, your, yacht clubs, your country clubs, those types of things are specifically disallowed.
Yeah, those completely fall under personal expenses, 100%.
Absolutely. And as do golf green fees.
Yes, although they do say a lot of business meetings happen on the golf course.
Right, and we've got a tip for that too. If you conduct a lot of business on the golf course, and you're an avid golfer, what's the number one tip I always tell people on kind of maximize deductions around golf? With the green
Let them pay the fees, and you pick up the drinks.
Exactly. Rachel's heard it so many times. I don't know if she knows exactly what I'm going to say.
Yep, and mind you, I'm not even a golfer, and I know this.
Yeah, exactly. And those drinks on the 19th hole, those are going to be deductible for you. Yep, other things that we have that are specifically disallowed are going to be things like your primary home telephone line, which is considered an essential service.
Yep.
Cell phones,
that is true.
VoIP, additional lines, those types of things are deductible, but the primary home telephone line is specifically not deductible.
Actually, but Andrew, with that though, if there are any enhancement features that you may have on your baseline, let's say for example you have a lot of long distance minutes because you're doing a lot of calls, those CRA do allow. It's just the base cost for the home phone that they don't allow as a business deduction.
Absolutely. So I mean, outside of that, there's not a lot of other things that are specifically disallowed. Now, insurance is a whole other ball of wax, and we'll talk a little bit about that when we get to the.
We need a whole topic on insurance, a whole podcast.
I really think we should do a whole episode just on insurance. I'll try and touch on it briefly here, but we'll maybe do an entire episode on insurance. But now let's just talk about some of the I guess, key things of what you need to know as to what you can deduct. And that is that third criteria that I talked about. We talked about, well, it can't be specifically disallowed by the Income Tax Act. Actually, we only covered one criteria so far.
Oh wait, we only did once.
Yeah, so I got two more for you. Secondly, it has to be reasonable. Subjective term. What's reasonable to you is different from what's reasonable to me, which is different from what's reasonable to Rachel.
That is true.
So that's subjective, but it does have to be reasonable. And two, it has to be spent with helping the business earn income. And again, we're now subjective, but this is where things are going to vary from one business to another.
That is true.
If you're a personal trainer, deducting your home gym is a lot more defensible and reasonable than it is if you're just, an IT consultant who's doing it you could have an argument. Whether it's reasonable is another question. But so expenses are going to be different from business to business. Now we're going to focus specifically on the service-based businesses that we help as our sort of primary niche. So around the service-based businesses, there's a couple of common categories that we use. And in fact, we use a standard chart of accounts that's broken down into these categories I'm going to cover today, so that we can actually compare you to the average and the median in our database and run a benchmark analysis, which, Rachel, you want to tell them a little bit about what our benchmark is and why it's so important?
Definitely. So essentially, I always tell clients, when it comes to your different expenses, it is very specific to your industry, of course. But CRA also has their way of benchmarking based on your industry, what's reasonable in terms of your deduction. So over the years that we've been in business, we've compiled data which gives a bit of an estimate of the income and expenses that a self-employed individual would be earning. And we benchmark your data to see whether or not you fall within that category. The other thing that's really good about this benchmark analysis, it's very unique to the industry. So, if a client is going to a general accountant, they may not have that specialized data to know, hey, what is the average independent contractor deducting? But our benchmarking analysis allows us to see that. So if your expenses are a little bit higher, we want to go and take a look. Hey, why is this high? Is this maybe misallocated? Is this something I could flag and audit? Or if you're under, that we want to go back to the clients and say, hey, we noticed you're a little bit low in this category. Is it that you don't have the expenses or you didn't know that you can deduct those expenses. So I think that's a very big value, because, a lot of clients, sometimes they come and say, well, what's too much? What's too little? They don't know. They want to know. And again, going back to that fear of CRA, when we provide that benchmark and analysis, I think clients feel more comfortable in terms of knowing, okay, well, the average guy who's doing the same thing I'm doing is deducting this. So you know what? I feel comfortable with these deductions. Right.
Absolutely.
So we definitely have this information which is available to our clients, and we benchmark client data every year, because every year your situation can change, your expenses can change, especially, for example, during COVID, right? A lot of individuals are now working at home. So you tend to find that some of the automobiles a little bit lower. Some of the other expenses have definitely changed, right? But definitely there is that bit of that value. That is true as well.
That came down.
Those have gone down, definitely. Yeah.
So we've seen some big shifts, and the benchmark analysis tool is a great tool to give you that peace of mind, to help you know that you haven't missed out on deductions, as well as that you're not on potential audit trigger for CRA. So that's a really important reason of why we break everything into these specific categories, and why we provide each and every one of our clients with a specific chart of accounts. So if you're going to be using that Receipt Bank tool, we're going to also give you a chart of accounts that you can import to Receipt Bank. It's going to be based on these categories I'm going to go over today. And I'm going to fly through them relatively quickly, because this episode's supposed to only be about 15 to 20 minutes, and we're already 10 minutes deep. And we do have more content on our website. We have a whole section on our website under our free tax secret section of our website with all the different expenses. So first and foremost, our own fees, all your accounting fees, those are deductible. Woohoo!
Including the cost to incorporate your business. A lot of clients don't think of those as expenses.
Absolutely. So if you ever need to increase your expenses and maximize your deductions, we're happy to raise our fees. No?
We'll maximize on that deduction.
Then you've got advertising expense, which is obviously traditional advertising, media advertising, web pages, social media, all that fun stuff, business cards. There can also be gifts that you purchased for existing or potential clients, sponsorships or business donations, or even events. So if you're hosting a big event, like a New Year's Eve party or something like that, we can deduct that as an advertising event as opposed to business promotion. And the reason that's important is because advertising, that's a regular deductible expense at 100%. Business promotion is going to be a percentage of use account where you're not able to deduct 100% of that. We'll talk
Always
more about
50%.
that. Yeah, we'll talk about that when we get there. But speaking of another percentage of use account, we have the automobile expense, where we can deduct. Well, actually, the funny thing about automobile is you have two choices. You can use the mileage method, or you can use the actual method. For most people, the mileage method has always worked out best until a year like COVID, where you didn't actually drive very much. And so if you only drove 100 kilometers, but you can take, 80 of those kilometers were for business, and you can claim 80% of all your costs, that's better than claiming 80 kilometers, right? Because the kilometer rate's only in and around the 50-cent range, and it does change year over year. But keep track of both so that you can use whatever method gets you the best deduction, because you can flip-flop from one year to the next, whatever deduction gets you the most benefit. If you're tracking actual, you're going to track the fuel, your repairs, your license, your insurance, maintenance, leasing, if you have that, interest on all the loans, amortization if you don't lease, or depreciation as it's sometimes referred to. And then we'll take a percentage of that. And the percentage of use account just simply means that you don't use this thing for this item 100% for business. So you're using it, let's say, 25% for business, 50% for business, 75% for business. Every individual is going to have a different percentage of use, which is typically calculated in the automobile expense by the business kilometers over the total kilometers gives you a percentage of use. So pretty straightforward. What else do we have? Bank charges, as well as any broker fees or any investment charges if you do have investments inside of your corporation. Those are all deductible. Credit card charges as well if it's a corporate credit card. So I think you're going to have an episode on setting up a bank account and a corporate credit card. This is one of those really important differentiators of getting a corporate credit card rather than using a personal credit card for business, which lots of people do, but then that fee, especially if you got one of those fancy American Express cards that I'm a big fan of, like all those flight rewards that cost like $600-700 a year. You want to be able to deduct that fee it's got to be a corporate company. And then we've got books and periodicals. This is one of those ones where I see over and over again people miss out on this.
You miss out.
It's, especially newspapers and magazines, back in the day when people were traveling and they go pick up books at the airport.
At the airport lounge. Mm-hmm.
Yeah, exactly, and not deduct them. As well as keeping in mind that, like, you've now got digital magazines, digital newspapers, things like Audible and ebooks and Kobo and all that stuff that is potentially deductible under here. And then we've also, now moving on, we're back to another percentage of use category. Just, I think this is all under an alphabetical order. We've got business promotion expense. So business promotion expense is what we often refer to as meals and entertainment. And the reason we call it business promotion as opposed to meals and entertainment is because one of the misconceptions about meals and entertainment is that any meal or entertainment that you have is deductible. And that's not
the case.
The requirement for business promotion is that you have to be having your meal with another person and promoting your business, which we believe that you are always doing, even if you're not specifically discussing your business. To the extent that you're building and furthering relationships, that is helping to promote your business. Now, there is one other exception that allows you to deduct this, and if it's a meal while traveling. Now, meals while traveling used to be 100% deductible, but this goes back like 5 to 10 years. And now,
way back when, they've made some changes.
Now, all meals and entertainment fall under this percentage of use, where basically the government is saying you're getting a benefit here, so we're only going to allow you to deduct 50% of it. Now, you report that full expense to your accountant, and they'll worry about that percentage of use calculation. So you just give them the full amount, but recognize that 50% of it's going to be added back on the tax return, and you won't be able to deduct it. And you've got, things like, obviously your meals and entertainment and, and tickets to sporting events. But the key thing here is understanding where the difference between advertising and business promotion is going to fall, right? So if it's you and one other person, that's almost guaranteed to be business promotion. It could be an event if you're inviting all of your employees, which in many of our clients, they're the only employee. So you have to be inviting all of your employees, and it has to be like a big gathering. And it's like, if you're trying to claim an advertising event on a weekly basis, it's going to be hard to justify that as an event, right? But if you're doing it like, a couple times a year, that could be reasonable. So again, this comes back to that reasonableness assessment, right? Now, this is one I haven't seen. Like, we've got it still on our chart of accounts, but I think we almost need to remove it. Computer lease expense.
Which
one?
No one.
Who leases a computer?
Hey, come on! Everybody, one time in their life, leased a Dell computer.
Yeah, I guess
I don't know if they still do.
There's a few Macs and a few really fancy gaming computers that you might actually need to lease. So much more and more computers are just actually becoming disposable.
That is true.
Which falls more under the second category, which is computer supplies expense. And the thing I want to mention about, computer lease, computer supplies, and amortization is that computer lease would be pretty straightforward. If you have any sort of lease where you're paying a certain amount every month for the computer, it goes on a computer lease, and it's 100% deductible.
That's deductible. Yeah.
The computer supplies expense, again, if it's under a reasonable threshold, we use $500 as our threshold. That's not, again, defined on the income tax anywhere. That's just based on the size and scale of our businesses. I can guarantee you that, Loblaws or, big multinational corporations are not using $500 as a threshold. They'd be using a much bigger threshold than that for what.
Not at all.
What constitutes an asset. But if it's under $500, then we can put those under computer supplies, and then you get to the expense of the entire amount currently. If not, it's going to be computer hardware, which is going to be subject to whatever the current rate is that the CRA is prescribing for amortization and depreciation. And what that effectively means is that is considered an asset. It's considered to have a useful life that will live beyond this year. And as such, you can only deduct a portion of that item in the current year, and then
that year.
A declining balance amount for the remainder of its potential useful life.
So it's actually for computer 27.5% for the first year, and then 55% for
Right, but there's
subsequent
also
years.
the thing is, they change this all the time. There's accelerated methods, and the good news is you don't have to worry about that. All you have to do is tell us. We'll take care of all
of that.
And I'm cautious
Yes.
to not lock in a rate because it does change all the time. And I would
true.
like this podcast to be a little bit evergreen. But the good news is, from your accountant standpoint, whoever you're working with, they just want to know, is this computer supplies, which is deductible in the current year, or computer assets that we will amortize? And then we'll worry about how we amortize that and take care of that. You just tell us whether it's an asset or an amortization. And I'll tell you now from our own experience, usually when we look at that, we're going to straight out ask you, like, hey, this is more than $500. You put it under computer supplies. Or, hey, you put this under a computer, asset, but it's under $500. Are you sure? So we're usually running that kind of check, and I assume.
So we'll switch it up. Yeah.
Yeah, and different accountants are going to have different thresholds for what that should be, but that's a good starting point. Another thing that seems to be, we're seeing, I think greater expansion of this is consulting fees expense. You can think of all the new websites where you can go and get services online from subcontractors or consultants to help you, whether it be Fiverr or I can't even think of all the names of all the other sites out there now that are designed to provide consulting services effectively to you. Whereas traditionally this was actually really used exclusively for actual independent consultants that you would hire on sort of a contract-to-contract basis, or even if you were doing any income splitting by the use of consulting fees, which we do not advocate for anymore, because if you're doing that, there's issues with GST, HST, but that's a whole nother aside. I mean, for the most part, what we see that used for.
Don't want to get caught up in that. Yeah.
Yeah, absolutely. And so right now also, if you do have subcontractors, you might want to consider issuing a T4A for them. It is, CRA does recommend, and they do want you to provide a T4A if you were doing consulting fees to a Canadian for more than, I think it's like $500. It's actually a very small threshold. But it's not actually technically a requirement. It's just a recommendation at this point. But that can create some additional onus for you.
Just better business practice altogether, right?
It is definitely better business practice, and it just sort of documents everything a little bit more clearly, and also recognize that whether you should be charging or paying GST, HST, because imagine a contractor is over $30,000 and they should have been charging you GST, but they weren't, and then they come back a year later and want to charge you GST, HST. If you're on the quick method, that's not good for you, because that's going to be like you're shelling out money out of pocket that you weren't prepared for down the road. So you should be paying attention to that. How are we doing on time here? We're definitely.
Oh, we have gone well over on time. Well over time. I mean, here's the thing. When it comes to the expenses, I mean, there's so much. I mean, it's hard to really be able to compact this within a 15 minutes, there's a lot of different, things that we take into consideration. I mean, at least for me, Andrew, when I have, meetings of clients, I say, look, any costs which you can, that you incur, that you can tie back to your business to help generate income for your business, it's a deduction, right? Just try and tie that in. And then even in terms of overall expenses, another general thing, I say, look, everything is generally 100% deductible with the exception of automobile, which is percentage, and your which is
home
based on
office.
percentage of use, and the home office, which is based on percentage of use, and then meals and entertainment, right? So and I tell clients, if you don't know, still track it, put it under the corporate credit card, keep track of that. You may record it as ask my accountant, I don't know. Let us help you make that determination rather than you just thinking, okay, I'm not going to deduct that at all.
Absolutely. I'll just rattle off, like, before we close, I'm not going to go into detail on these, but I'll just rattle off the remaining categories now. So we got education and seminars, which is actually one of those ones that often gets overlooked and not used. Employee benefits.
Very much so.
Typically going to be your employer portion of the CPP, as well as if you have any benefit programs. Office supplies, professional fees, rent, the home office. This is Again, an often underutilized one that we've got some specific
Very much so.
calculations that we can help you maximize that deduction. That really makes a big difference. We've got insurance expense, interest and penalties expense, general catch-all when you don't know where to put things as a general expense category. Repairs and maintenance. Now, repairs and maintenance, the funny thing about that I will mention quickly about this is repairs and maintenance, we also have a repairs and maintenance under the home office expense category. If it's specifically to your home office, you want to deduct that under repairs and maintenance. Whereas if it's a repair and maintenance to the whole house, where we're going to take a percentage of that repair and maintenance, that goes under the rent or home office. Whereas if you did a specific renovation specifically to the office portion, that's 100% deductible, that goes under repairs and maintenance. We've got telephone and internet, travel, which be another one of those categories that dropped with COVID. We have wages and salaries, and the rest of the stuff is really getting into more some stuff on how to capture your income and understanding the difference between GST, which we do have a whole nother podcasts and episodes dedicated to those. So we really do hope you're enjoying this content. But before we do wrap up, Rachel, I know we've gone a little bit long here. Any last minute tips? Yeah, just a little. Last minute tips for people when it comes to maximizing those deductions and maybe areas where people often miss out.
Again, we're not advising clients, every time you're ready to purchase something to reach out to your accountant. Well, again, we understand that sometimes you don't know. And I think the thing I always keep telling clients is that if you're unsure, it is better to put it under the business, whether it's under the business credit card or the business account. We can help you when we can see, hey, okay, you took this trip, but you went to a conference and you paid for it personally and you didn't discuss that with us, and we don't know that you're losing out on that deduction, right? Or you took a trip to, you needed a getaway and took a trip to Cancun, and we'll say, nice try, you can't deduct that as a business expense, right? So I think the key is, put it under the business if you're not sure. And, just when you're doing your bookkeeping, flag it if you're really concerned about those expenses, and let's help you, right? I think the first year, it's always a little tricky for businesses because they just don't know, right? But on the second year and third year going along, clients get a little bit better and it gets a little bit easier in terms of tracking your income expenses. So, the two things, set up a corporate credit card, and not sure, put it through the business accounts.
Absolutely. And I love that advice. Like, when in doubt, record it and put it through the general expense category. It's a great place to put it because we're going to review that in detail just to make sure, hey, what's in here, what can be reallocated to other places. So if you're unsure, put it through. And I think one of the other things that I think is a big opportunity that is hopefully going to be opening up as the world opens back up is travel. And travel with a little bit of foresight and a little bit of planning. There are ways to make those trips down to, the Caribbean deductible, but they have to be done with a bit of foresight. One of the greatest ways I like for making a trip deductible is going to a conference, right? Makes it instantly deductible. Yeah,
that's always a good one.
It's going to cover your airfare. May not cover 100% of the hotel, but it's certainly going to cover a portion of it. And anyone who knows me knows I love to go to accounting conferences. And then the other thing that I love is... Yes, you do. is real estate investment. So if your company is investing in real estate and you're looking around the world at global investments, that is a possibility for making trips deductible. But the key there is the assumption will be it's personal until you can prove it is business. So you better wrap that in a darn lot of, of documentation. I want to see, emails back and forth with the realtors, pictures of the places you went to see. Document the wazoo out of that because it will be assumed personal until you can prove it's business. And I think
I always tell clients the burden of proof is for you to prove that you incurred this cost to generate potential income for your business. So that's really the key.
Yeah, that is the key when it comes to deducting expenses. Is the burden of proof is on you to prove that this is a legitimate business expense. And we believe that we're giving you the right tools to be able to do that with Dext and Receipt Bank, and linking that into all the services that we provide to help you guys organize your finances, create wealth, and transform wealth into life. And on that note, I'm going to call it a day for today, and we'll be back again with another episode coming real soon. Thanks, Rachel.
Thank you, everyone, for joining. Have a good one.